Good morning and welcome to Join the Dots. Well, I've done an awful lot of thinking over these last few days because of what I'm seeing, okay? But before I tell you what my thoughts are, please can you subscribe? My son, who produces these videos for me, says that 69.3% of all viewers are unsubscribed. They're not subscribed. And yet it doesn't cost anything. Some people actually believe it costs money to subscribe. It doesn't, okay? Just press the button. Because then we get a better spread of viewers, and then we get more interest, and then we get more questions, more debate, we get more answers, and we expand our knowledge. So please, please subscribe. As I say, 69.3%, 70% of people are not subscribed. So I'm getting some great views, but come on, please, let's have some subscriptions. Right. Today's title, 40% September crash. That's my perception now of where we are. There's a 40% chance of a September stock market, property, bond crash of everything in effect, except obviously certain quality assets which will retain their value, and in fact they will increase in value as a result of everyone trying to find safety in a very, very unsafe world. So first of all, I'll give you a link to George Gannon. It's an interesting chat. George is good. He sees that the majority of people are not looking at fundamentals, and that is so true. People want an answer in 30 seconds or a minute, or they can't even watch 5 minutes of a video. They can't watch 10 minutes. They can't watch an hour. They want an answer. So they're not working on fundamentals, because to work on fundamentals, you need to understand the fundamentals. You need to do a lot of research. That's what I'm trying to bring to you. I'm trying to bring to you the people who do all this research, the Rick Rules, the Andy Sheckmans, the Alistair McLeods, the George Gannons, the market snipers, Greg Manorino. I'm bringing them all to you because then you are getting thousands and thousands of hours of research. And you're getting hundreds of years of experience. You can't get that through reading the Times or watching the BBC. It's not the same world as it used to be. So George Gannon talks about no one's looking at fundamentals, and the majority of investors are just passive. So in other words, they put so much a month into their pension fund, and their pension fund invests so much amount in a month into equities. Well, that's fine, and that works 8-9 years out of 10. But it gets slaughtered in that 10th year, slaughtered. And that's where I think we are. Okay, most people are investing through very low cost ETFs. That's been the marketing narrative for years now. Invest through low cost ETFs. Okay, the Vanguards, the BlackRocks, the people who just keep investing your money. Meanwhile, they're selling on the side, aren't they? The insiders are selling. Okay, they are. We're seeing the Zuckerberg sell. We're seeing the Bezos sell. We're seeing the largest 3 board member shareholders of Nvidia sell. We've seen Jamie Dimon sell. Why are they selling? The simple answer, and they will try and persuade you, oh, well, I need to meet my tax bill. I need to do this. I need to do that. No, they know what's coming. They know what's coming. So the second link I'll send you is Andy Sheckman. And he describes very simply, if you sum it up, people are in, insiders are out. Yes, the insiders are selling at a ratio of 7-1 over insiders buying. They know. Remember, they're close to the money. Remember the Cantillon effect. We've covered it many times. Those closest to the money are moving it out of the share, the property markets. All right, by every metric there is, the equity market is way overvalued. Remember, I've told you, the PE on the S&P now is somewhere around 29-30. The long-term mean is 16.5, so it can fall 50% and just be below the mean. And in a crash, it always goes a long way below the mean. It doesn't stop at the mean, okay? It has to go too far to come back again. Risk-reward is just totally wrong. Totally wrong. And anyone who can't see that, I'm sorry, they're just not doing enough thinking. And that's a world we've created, isn't it? Over the last 20, 30 years, the media, the elite, the corporate fascists have created a market where you are told not to think. Don't have an opinion. We don't want you having an opinion. We don't want you thinking. We will tell you what's going to happen. You will do it. Think of the vaccine. We will tell you what to do. You will do it. No debate. No questions. It's the same with the market, sadly. Okay, I don't see any really researched, thoughtful articles coming out of the Wall Street Journal, the FT. I don't see them. Don't see them on the news. Don't see silver and gold being discussed largely. And yet I told you yesterday, what are my shares up? One's up 65%, one's up 59% in a year. Not even a year, is it? It's not even 9 months. Okay, so 54% of equities are held by the public now. That is the highest level ever. Ever. Okay? Highest level ever. What does it tell you? There's a trillion of margin exposure. A trillion public margin exposure. There's the largest option exposure on record. Yes, I know that we get more chance of doing it as the world grows and gets older, but no, come on. Risk reward, let's get to basics here. The risks are all stacked against the public because the public are stacked in the stock market. So the insiders know, though, they're selling 7-1. As I say, Bezos, Dimon, Zuckerberg, the shareholders, the largest board member shareholders of Nvidia, they're all selling. Institutions have been selling $2 billion worth of stock a week since the beginning of the year. So this is all contained within Andy Sheckman's presentation. And I don't know what else to say, really, because if you don't listen to that sort of conversation, if you don't listen to those statistics, if you don't think about those statistics, you're not thinking. End of. All right? So I want to talk about leverage, because obviously leverage is where people are really exposed. Now this happens to property as well. Now I know that your home is your home. I understand that. Okay, I understand that. The danger is if you go into a period where prices move dramatically downwards and you've got a high level of debt, whether it's stocks or whether it's your home even, you've got to be very careful. Okay, you've got to be very careful. At the moment, I know there's a central bank almost agreement to tell the banks not to foreclose. They know what's coming. They know what's coming. So I think debt reduction is one of the themes that I really want to concentrate on. People need to reduce their debt. They need to get out of margin positions. They need to get out of... Options are dangerous, because they're a total wipeout if you get it wrong. Maybe the market will expand a bit more, maybe not. But I'm saying that we have, in my world, and I've seen September, October be very rocky months before in my history, as I've watched markets. I think I'm going to say there's a 40% chance of a September crash in the markets. And if we don't get it in September, I would say there's another 20% chance in October. Now, we've got the Fed coming up this month, yes? And now they're talking 50 basis points. If they do 50 basis points, the markets will crash, because it's a complete crisis signal, isn't it? Because they've gone from no cuts at all, don't even want to talk about it. We've got tariff inflation coming, we can't have a cut. They're now talking 50 basis points. I don't think they'll do it. I still think they'll do 25, because 50 would be a complete and utter crisis signal, and I think the markets would react. They did last September when they cut by 50, but this time, why? Jobs, 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 no jobs, no jobs, no jobs, no jobs. Okay, there's been no jobs for the last 6 months, if you really study the detail. Okay, so we've got a real problem. And I think we'll leave it there today, what I want to do then is lead into tomorrow's episode. Tomorrow's episode is going to be what we do and why, given that we're facing, in my world, a 60% chance of a crash in either September or October. All the metrics are against us. The insiders are selling. Okay, the institutions are not buying. The public are all in. What more do you need to know? Okay, so please come back tomorrow and we will talk about what our options are, and not options in terms of share options, but what our prospects, what our options are in not hiding from this crisis, but taking advantage of this crisis. Okay? A lot of people will hide just in cash. They will just hide. And that's fine if they have no debt. They're not going to be wiped out, put it that way. But those with high debt and low equity and margin exposure and option exposure, they could likely be wiped out. So please come back tomorrow and we'll have some very positive answers on what to do, and we'll have some great links with some really good solid information on how to survive and thrive from this crisis that's coming. Okay? Remember, please do subscribe. Please, 60-70% of people are not subscribing. It's just a button. You don't pay anything, I promise. There's no fees. Okay, it just means you get sent this link when we produce the next video, and you can follow our journey. Thank you very much.